This is why I'm super bullish on ETH. So what the heck is going on with Ethereum? It's been practically moving sideways for months while the broader market has been absolutely ripping. So in this video, I'll be sharing exactly why I'm bullish on Ethereum and outline my main investing strategy for it. And for complete transparency, I've been investing in Ethereum since 2017. Bitcoin has been on a tear this year, flirting with the elusive $100,000 mark. But what about Ethereum? Many of us once believed that Ethereum would be the next Bitcoin, offering even a greater growth potential. But yet, during this bull run, Ethereum's performance has left some investors wondering when or even if it'll pump. So, as of December 2024, Ethereum is trading around $3,600 and up about 65% for the year, which is nearly half the performances of Bitcoin's 122% since the start of the year. And when you compare it with some meme coins like Doge's return of 390%, Ethereum is starting to look like peanuts compared to the broader market. But boring and slow doesn't always mean bad. In fact, Ethereum's lack of wild gains this year is one of the main reasons why I'm so bullish on it for the long run. While everyone's chasing a quick profit in crypto, Ethereum is quietly setting the stage for something bigger, something that could redefine the role of crypto ecosystems and potentially deliver massive returns over time. I'm Eric Pan, aka Ericnomics, and I make investing simple and easy to understand for everybody. Whenever there's an investment opportunity, I'll be sharing the research, insights, and data that you should know to help you make an informed decision. We'll be breaking down Ethereum into 4 key topics. Number 1, what is the global view on Ethereum compared to Bitcoin? Number 2, what are the bullish drivers for Ethereum? Number 3, what are the potential risk factors for Ethereum investors? And 4, finally, my investing strategy for Ethereum. Please join me on this discussion about Ethereum. Even though that this is a video, I really hope to see your thoughts and investing insights in the comment section down below. So what is the global view on Ethereum compared to Bitcoin? If you're new to crypto, you might be thinking that they're both pretty similar, right? Both are pretty big names that you've often heard, both are pretty valuable, and both seem to be the main digital asset that people are investing in. But the reality is that these two are fundamentally different. Let me walk you through some data. Right now, Bitcoin dominates the market with about 55% market share, while Ethereum is sitting around just 13%. Bitcoin is only gaining more market share while Ethereum is losing market share. And on the surface, that might make Ethereum look like it's slowly being forgotten. But me as an investor, what I'm seeing is that this gap is part of an opportunity worth looking into. Bitcoin's dominance is so high because it's become the gold standard of crypto. Literally, people call it the gold standard. It's the store of value. It's the asset that retail investors and even institutions trust when they want exposure to crypto. But Ethereum is something completely different. It's not just an asset. It's more accurately described as an infrastructure to Web3. Bitcoin is like gold. You can't do anything with it other than just sit there and just hold its value. Ethereum, on the other hand, is like the internet of the crypto world. It's the platform where all the action happens. We're talking about decentralized finance, NFTs, gaming, even real-world applications like supply chain tracking. Basically, Ethereum is where all the innovation lives. And this is reflected in the numbers too. Ethereum also powers about 60% of DeFi protocols. Even BlackRock launched a real-world tokenized fund that invests into US Treasury bills on the Ethereum network. We're starting to see more and more real-world adoption happening every single day. Also, I want to point out a key factor that most people overlook. Supply dynamics. Bitcoin has a hard cap of 21 million coins, and once those 21 million are mined, that's it, no more Bitcoin. Ethereum, on the other hand, doesn't have a fixed supply, but it has something called burning. Every time a transaction happens on Ethereum, a small amount of Ethereum is burned, essentially removed from circulation. In 2024 alone, more than 465,000 Ethereum has been burned according to CoinGecko. This means that Ethereum's supply is actually shrinking over time, which is a huge deal for its long-term value. Here's my personal take. Bitcoin is the obvious choice for institutions dipping their toes into crypto, but Ethereum is the hidden gem for them. It's got utility, it's got the highest number of active developers on its ecosystem compared to Base, Solana, Avalanche, or Polkadot. And this shows that Ethereum has the potential to outgrow Bitcoin in ways that most people don't really realize. However, I would also not sugarcoat the current market price. The price is king after all. The market reflects how the majority values Ethereum right now. And Ethereum hasn't had its flashy bull run that Bitcoin has seen this year. In fact, Bitcoin has surged from $60,000 to nearly $100,000 while Ethereum is somewhat chilling. And at this point, you might be wondering, isn't Ethereum supposed to be pushing higher simultaneously whenever Bitcoin is rallying? Well, this brings us into our next crypto metric, the path to alt season. Historically, whenever Bitcoin dominance peaks at like what it's doing right now at 55%, Ethereum tends to follow with its own breakout shortly after, or even simultaneously. We've seen this in every bull cycle since 2017. And in fact, in those years, Ethereum's dominance that had jumped above 20% signaled its own explosive growth phase. Right now, Ethereum is only around 13%, and this tells us that we have a lot of room to grow, and especially as we move closer to the next phase of the bull cycle. Here's my takeaway. Bitcoin might be the leader right now, but Ethereum is the one quietly setting up for long-term dominance. Its utility, adoption, and supply dynamics are all aligning for a perfect storm. The only question is, will you be ready when it happens? Whether you are currently an investor, trader, or interested in getting your feet wet in Ethereum, you should always know the potential upsides and downsides. So next up, I want to cover the bullish drivers for Ethereum, as well as the potential risk factors that investors should be aware of. So what are the bullish drivers? What is fueling my bullish outlook on Ethereum? Let me clarify. The Ericnomics channel isn't about hype or speculation. As a bullish investor, I'm always researching the real-world factors that are quietly shaping Ethereum's future and positioning it for future growth. So there are three major drivers in my opinion: utility, scarcity, and institutional adoption. Number one, the Ethereum ETF. The Ethereum ETF still lacks institutional adoption, meaning how much Ethereum are being held by large funds. And these are not regular hodlers like you and I, but big players and whales like hedge funds, endowments, and government organizations. Bitcoin has stolen the show here with over 50% of the top US hedge funds holding Bitcoin on their balance sheet. But Ethereum is largely untouched. It's an untapped opportunity, and I believe that it's about to change. Here's why. Ethereum ETFs have been recently introduced into the traditional exchanges. Historically, the only way to get exposure to Ethereum before the ETFs was through Grayscale's Ethereum Trust, which is like an ETF, which was also really expensive. But ever since these ETFs were introduced, we've seen some tremendous outflows as investors moved out from Grayscale's expensive product and into the newer, cheaper options, but the tide is finally turning. In recent weeks, we've seen Ethereum ETF inflows starting to catch up to Bitcoin, which is huge considering Bitcoin's volume is typically around 5 times of Ethereum. So to see Ethereum pulling similar numbers as Bitcoin is quite impressive. This signals that institutions are beginning to take notice. Here's my personal insight. The big institutions tend to move in phases. First, they dip their toes into Bitcoin. Then once they are getting a little bit more comfortable with it, they start accumulating a lot in masses. Then they look for the next big opportunity, which is Ethereum. With this real-world utility, deflationary supply dynamics, and growing adoption, it's only a matter of time before Ethereum becomes the institutional favorite. And that's especially after the second reason that I'm about to mention. Number two, staking. Staking is a mechanism that some cryptocurrencies introduced to help secure the blockchain. With staking in place, the owner of the token are encouraged to lock up their tokens, and in exchange, they earn a fixed percentage yield of return, similar to an idea of interest paid by banks. However, if you stake your tokens, you lock it up and you can't move them, thus less supply to be traded. Right now, about 28% of Ethereum's total supply is being staked. That's a massive chunk of ETH that is locked up, meaning it can't be traded or sold. This further creates scarcity and reduces sell pressure, which is great for long-term price stability. And here's the kicker. Staking hasn't even been approved for the ETFs yet. The Ethereum ETFs are simply just holding the ETH and not staking it, losing out on additional yield. When staking is approved for the ETF, it's going to attract a ton more investors looking for passive income. Personally, I own both the ETF and Ethereum outright, and the Ethereum that I own outright, I'm staking it because it not only earns me yield, but also keeps me disciplined. I'm not tempted to sell during short-term dips, not that I would hold on to it forever, but I'm reminded of my investing plan and long-term targets for this asset. If you're also a fellow ETH holder, are you staking it? If not, let me know in the comments why not. Number 3, real-world utility. Ethereum isn't just a cryptocurrency, it's an ecosystem. It's the foundation of the next generational user technology, Web3, powering decentralized finance, NFTs, gaming, and even real-world use cases like supply chain tracking. There are so many large cap projects that are currently run on Ethereum, such as Uniswap and Aave, and if you have no idea what those projects are, here's an analogy. Think of Google, Amazon, and Yahoo in the 1990s. Let me give you a more relatable real-world example. Banks are notoriously slow and expensive when it comes to loans and payments, and the fastest method of sending money around the world costs nearly $50 and it still takes a few days. Using crypto can cut those fees to a matter of pennies and a few seconds. Decentralized finance is cutting out the middleman, making borrowing, lending faster, cheaper, and more accessible. That's not just innovation. Ethereum, along with all the other projects that are being built on its ecosystem, could potentially drive a new way of disruptive technology, just like how Uber impacted taxis and how Netflix replaced Blockbuster. What is your opinion on the future of Web3 technology? Please share your thoughts in the comments down below. Number 4, scarcity. The last bullish driver is scarcity, and scarcity is an extremely crucial factor that determines the economic value of Ethereum. Most people know that Bitcoin's hard cap is 21 million coins, but what they don't realize is that Ethereum has its own unique mechanism for creating scarcity, and it's burning. Every time you make a transaction on Ethereum, whether you're sending money, swapping tokens, or interacting with a smart contract, a small amount of Ethereum is burned, and that means it's permanently removed from circulation. And here's where it gets interesting. Ethereum's burn rate increases as the network gets busier. So as adoption grows, whether through its DeFi, NFTs, or gaming, Ethereum's supply shrinks even faster. It's the exact opposite of inflation, and it's one of the reasons why I believe Ethereum has massive upside potential for long-term investors. But of course, every investment has risks. So let's talk about the potential downside risks that you need to consider before investing in Ethereum. Potential risk factors for Ethereum investors. All right, now we've covered the bullish case for Ethereum, but let's not get ahead of ourselves. Like many other investments, Ethereum has its own risks that it's important to be aware of before making any decisions. I'll keep it real with you and straight to the point, focusing on 2 key risk factors. Number 1, regulatory uncertainty. Governments around the world are still trying to figure out how to handle cryptocurrencies, and Ethereum is in a tricky position. Unlike Bitcoin, which is mostly seen as digital gold, Ethereum's utility as a smart contract platform makes it a harder spot to classify. Is it a commodity, is it a security, or is it completely something different? In the US, for example, the SEC has been scrutinizing crypto projects, and while Ethereum has mostly avoided direct legal challenges so far, its broader ecosystem, including DeFi projects and NFT marketplaces, could come under fire. Regulatory clampdowns on these areas could indirectly impact Ethereum's adoption and price. So my take is that regulatory uncertainty is a risk, but not a deal breaker. Ethereum's decentralization and widespread global adoption makes it resilient. That said, as an investor, we need to keep an eye on how governments evolve their stance, especially in major markets like the US. However, it does look a lot more optimistic with this new administration coming into office, which has vocally been pro-crypto. Number 2, growing competition. The second biggest risk is competition. Ethereum used to be the go-to platform for everything, but that's changing. Competitors like Solana, Avalanche, and Cardano are faster, cheaper, and gaining market share. For example, Solana's transaction speed can hit up to 65,000 transactions per second, compared to Ethereum's current speed about 15 transactions per second. And while Ethereum's layer 2 scaling solutions like Base, Arbitrum, and Optimism are addressing the issue, the question is whether it could still maintain its dominance as these newer platforms evolve. I personally believe that Ethereum's first mover advantage and developer community with over 400,000 developers actively building gives it a stronger sustainability. However, the competition is real, and as an investor, I always keep an eye on other platforms that are growing. Finally, here's my personal approach to investing in Ethereum. I've been investing in Ethereum since 2017, and I bought at its very top, and I've also bought it at its lows. Heck, I've even been hacked and lost a bunch too. But what has always worked for me has always been to accumulate on weakness. there's always going to be some bad news about crypto or wherever you look. Those will inevitably have some sort of impact on the price. But I found if you stay diligent in buying on those dips and you hold it for long enough, you will make some healthy gains. Take a look at the chart of the ETF flows. On the days that the ETF saw the most outflows, we can see it directly impacting the price. Those are the days that I would be buying. Ever since Ethereum migrated over to proof of stake, I've been staking my Ethereum, earning me anywhere from 3 to 4%. So even during bear markets where Ethereum's price hasn't really been moving, at least I've been collecting income from staking rewards. So whenever I buy Ethereum, I take that and move it over to Lido or EtherFi and stake it and earn me additional income. Now, it's important to remember that staking isn't exactly 100% risk-free. There still are some risks involved, such as slashing or the underlying protocol getting hacked. But I'd say those are fairly low risk and shouldn't deter you from staking, but it's still worth calling out. I hope this video gives you some clear picture on why I'm still extremely bullish on Ethereum for the long term and how I'm approaching this as an investor. Are you bullish or bearish on Ethereum? Please share your thoughts with me down below. It's important to remember that every investor has a different risk appetite, and I hope that my personal insights of investing approach can help you become more informed about the second largest digital asset in the world so that you can plan your investing decisions strategically. If you're looking for a reliable platform to start your crypto investing journey, I highly recommend checking out Gemini and Coinbase. Those are the two most beginner-friendly and secure platforms to buy, sell, and manage your crypto assets. You could find my referral link in the description down below to get started with a special sign-up bonus. And if you want to dive even deeper into the world of crypto, be sure to check out my crypto investing playlist somewhere over here. I've also made a detailed video on Bitcoin and where it's heading right now.